and momentum for consistent profitability, right? And when I was thinking about that, I think that it helped a lot to tune out noise. And now noise can be any kind of different things. But today I'm going to talk about psychology mixed with a little technical in terms of strategy as well, about how paring it down a little bit will actually make you stronger versus adding more to a system. And there's some psychology behind that. So that's what I was thinking about today, is the power of clarity with your trading, because I actually do think that it moves the ball forward in a way that I think is underrated. Honestly, I think that when you're early in trading, we kind of hope to find more, right? To get more answers, more clues, more confluences, more information that can make us get to the profitability faster. And I think that is sometimes not as helpful, because the more you add, the more it can get confusing, and you can get that analysis paralysis, and it can add so many layers that it's sometimes hard to suss out what the priority is. And so I think that if everyone can kind of come to this session thinking about what their trading strategy is, and I'm going to ask some questions here and there, so we can work together in terms of maybe seeing what we can trim down a little bit in order to get those more consistent outcomes. So this kind of breakdown of how I laid it out today, of the complexity trap, about how sometimes it will lead to worse outcomes as you're adding in, and kind of a little bit of information about that. Analysis paralysis, how that can actually complicate your ability to execute. What a simple system would look like and how you could structure that. So that way you can have like a core framework that you always lean on, and stuff that you know is just extra and not at all the priority when you are trying to really drill into your trading. And then intentional growth. So when you do start adding or fine tuning and just choosing what to keep and what to not, or how you need to progress, how to do that with like a real purpose with it. Okay. So, I want to see if this is your guys' experience. Let's just start chatting a little bit. Where are you at in your trading? How long have you been into it? And if you are on the earlier side, is this a situation that you find yourself in where you have like 4, 5, 6 different indicators? And then you're trying to tune into multiple different content creators, streamers, noise, data streams, Discord sending you announcements, X sending you announcements, your news feed also pinging you. You're trying to watch the price, but you're not catching your entries. You seem to be caught up in this other thing and waiting for this confluence, but then these ones all fired off, but you were focused on this thing over here. And then this tweet came out and you're trying to suss out if it's important enough to draw your attention or not. Meanwhile, price action is going on without you. That's a complexity trap. So most traders don't really realize they're in it, because they just feel like in those moments when you're in your trading in the morning, that can feel like you're just trying to pay attention to everything, right? You're doing your very best to be the best trader that you can be. That's the intention behind it. Like, no one is saying the things that you add are just because you try and be extra, but more so, I think people try to keep their ear to the ground and pay attention to everything, because they are trying to do what's right, to follow all the data, to do what so-and-so said that they do, because they want the consistent results that you think that person is getting, whether or not that's verified or not, right? So, all right, come on, let's give a little interaction. What do you guys have? How many indicators are on your chart? So EMAs, VWAP, RSI, stochastic, volume, fib levels, actively drawn, I don't know, indicators, Bollinger Bands. How many do you guys have? Yeah, overthinking is absolutely part of this. Okay, yeah. One indicator, RSI and price action. Okay, Miriam, this is how you're past the first year, because one time I traded with this person, and she's 2 communities ago, so I know she won't see this, but I won't say names. However, we would tease her because we would say she's actively lost in the weeds, because there was so much on her chart that you couldn't hardly see the candles, because there was like shading indicators and lines, extra lines. It was like more than moving averages, but like a couple. And then when these two crossed, you would wait for this other one to catch up. And it was like, it was insane. And she was like trying to find meaningful trades in there and trying to explain it to us about how when all these shades turn and these cross and this one is up here at this level, then that's when you know. But it was like, holy moly, the move is almost done. Plus, like, you just sat by all this stuff, right? Okay, Tina's got the 20 exponential moving average, initial balance indicator. I love initial balance. That's a good one. Price action, 9, RC, MACD, fibs. Yeah. Okay, so I think that is sometimes too, you use some at key times and you don't have them always on your chart. Like I would ration that Matt has these that he uses as keys, but he wouldn't look at them all the time. Like he's not constantly fibbing something, but only if he sees that a fib is setting up and he wants to gauge a number and see where it's at. And so selectively using them too is different than having them always on there all the time. What is up, one love? Oh, MJ, hey girl. I think you're female. I don't know. What's up, everyone? I appreciate you guys being here and some interaction in here. I like RSI. When I'm in my Sierra charts, it's stochastic, but it's RSI and stochastic are very, very similar. I like that at my key levels only. I turn it off on my charts. I think I mentioned this the other day when I was streaming. I turn it off when it's not at a key level because I use that more for divergences. Either if I think that the pullback is going to give like hidden divergence or whatever, or if I think I might be at a pivot level, I will use that as a conference to see if I get a divergence there, but I turn it off. And so that is the key point too of like, I will use RSI, but not all the time. And I turn it off. Yeah. When it makes sense. Thank you for that. Okay. So you guys, we've got some traders in here that are past year one, it sounds like. If anyone is closer to year one and has questions, speak up at any point, whoever is watching this live stream, or if you're catching this in the recording, put some comments in the chat if you have questions at any point, and I will address them directly within, the day that you make your comment. So thanks, guys. I love doing this live every Tuesday at 2 p.m. Eastern so we can have some interaction in the chat. I think once you start getting deeper in your trading career, you do start trimming and knowing when they have higher priorities, and you have the ones that really speak to you the most on your chart, which is what I love to hear. So then we won't spend forever on this earlier part about why we overcomplicate, but I do want to touch on it a little bit because I think anyone can lean into this depending on what you're listening to and how you want, what you think you might need to have. And I love Miriam's point about overthinking also being a way of complicating things, because even if your chart is relatively clean, but your mind is super busy and you're wondering about all of these things and trying to hear from other people, that can add complication to your analysis because it slows down your focusing of the data that really matters because it's thinking about all these tangential things. So overcomplicating and trading rarely comes from laziness, which is what I want you guys to know if you still are in an overcomplication phase, that it's not because you're doing it wrong. It's just that you're searching for certainty. And that is a very tricky thing in trading because there really isn't. The market is going to do all kind of crazy things, especially in this day and age where we are in the era of tweets moving the market massively, more so than any sort of logical price action does at any given time. And so even with that backdrop, without it even, there's no certainty in trading. The market can do any kind of thing. And so the more we kind of add to try and feel really good about our trade opportunities, you're searching for that certainty. And there's an anxiety component to that, piling on those tools to help to finally find the holy grail of now your risk is almost non-existent because you find the right mix of all of the things. Trading in zones, trading in the zone. Very infinite variable and probabilities in your mind cannot catch it all. So intentionally practicing. Oh, good job, Miriam. That's excellent. Yeah. So part of how you can overcomplicate, right? Following too many streamers with conflicting strategies. So if you're trying to listen to different styles at the same time or within the same week or trading day, that can really be confusing. Adding indicators to confirm entries that already made sense. And so if you kind of have a strategy that you think works and you start to add different things, those will make more to look at, but not necessarily to change the strategy that you already saw. Sometimes they help, but sometimes it just slows you down. And chasing every new concept without mastering a single one, I think that's the biggest risk of this, is that you'll add too fast. You'll add all these complexities before you really even fully understand the core of a setup. You're trying to put in all these extra layers that would make it like crystal clear, but instead it adds all these layers that you're just constantly like searching to all the other things. And so then it can start overlapping, and this one says this is a risk and this one says it's good to go. And so then you can miss a good setup that if it were cleaner, you could capitalize on. So that's kind of the risk with that. Yeah. Trading the Zone by Mark Douglas. You're like the second person in 24 hours that reminded me of that book. I need to maybe give it a re-listen. I think I've listened to it at least twice. And I think I quoted him in this episode today. As though Warren Buffett, the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd nor against it. So this is about being really kind of neutral, calm, steady, tuning out a lot of the noise and not needing that more. So you just want to be steady. You don't need to be the smartest person in the room to be a good trader, but the more you can just hold your ground and be focused on your data, I think that that is what he's trying to say is like that's powerful. Tuning out the noise instead of and just believing in your system is like super powerful. So the same principle applies to traders, right? Clarity beats complexity. And now clarity can come from a few indicators. Of course, you need to have, I think it's stronger to have at least a couple of confluences when you're creating your trade plan and you're figuring out what it looks like and what gives you confidence in the trade. But too many signals, it makes it complicated. But if you have a discipline of really understanding your core, 2 to 4 and seeing them when they show up, then that will make you a lot faster and you won't have near as much FOMO because you will, shoot your shots at the best opportunities that you're seeing based on your system versus that complication slowing you down and then missing opportunities. And then that is a potential tilt opportunity for people, which we got to stop that. So here's a question, you guys. Has anyone ever added an indicator because you were frustrated during a losing streak? Because I think that is something that people will do. You'll be in a losing streak. The market will have shifted a little bit. You will be frustrated. You need something to fix it. And so you will hunt and you'll be like, maybe it's the fair value gaps that I keep missing. And so I'm going to find this. And maybe I missed, this. If someone says they trade Bollinger Bands and I have a 90% win rate. So clearly I must need to learn Bollinger Bands because I'm losing right now. Yeah, I have. Yeah, Tina has too. Yeah, it's been a while. Good. Yeah, I think that that again is an earlier start of your trading, but I definitely did that in the beginning and I hunted. And it led to some of my most powerful indicators that I currently use. So it's not always a bad thing. But then once you start getting more down into what really works for you, that's when you want to back off from hunting for every single thing that could work for you. Once you start getting a system that really works and you understand, that's when you need to back off from that. But if you're still fine tuning your system and there's more work to do, like listen to good coaches, like Coach Matt on his technical labs on Thursdays, like the things that he uses, he explains them in a way that is so powerful. And so there are reasons to add. But I just want you to know that sometimes it's not the right move and doing it too fast, especially during a losing streak when you're grasping at a fix, is a tricky time. Okay, so analysis paralysis. Everyone has heard that one, that term. When more becomes less is the whole crux of it. So when too many signals compete for your attention, your brain enters a state of decision fatigue. Whereas the clean setup that you train for can get buried in the noise. And so if you have, even just structure, like this is a support. And so I need a breakout and a retest, and then I'm going long because the support area holds, which means the direction is bulls. And if there's targets above that makes sense and it's within your scope of risk management, then you long on the pullback is the trade. But if you have a million indicators, then maybe this is giving hidden bearish divergence. And so maybe this is going to sink lower and XYZ. And we haven't seen the squeeze. We haven't seen the cross yet. It can really slow you down sometimes if it doesn't make sense. And then your clean, clear system that you were hunting gets mixed up. And then you end up having to get in the trade really late potentially. And you take on more risk in that situation. So conflicting indicators don't really slow you down, but don't always just slow you down, but they will create doubt at the moment of execution if you have too much going on. And that's when you want to have the most confidence. That's when you want to see your signal, have it predefined in your strategy based on XYZ that you really kind of understand at your core. And then when that entry signal lights up, then you know your probabilities. Like it's not going to be a 100% certainty because nothing is. But if it's a high probability setup that you understand with the risk that you can accept in your account, you go for it. But if those conflicting signals are there and you second guess and you hesitate and then it starts going without you, or then sentiment changes, or you look at something else, it can lead to irritation. And irritation is dangerous as a trader. Tony Robbins, so he's not a trader, right? He's in the business industry and motivation world, but complexity is the enemy of execution. And there's a lot of very successful entrepreneurs out there who will just say, you don't have to be perfect or super complex or really like you've spent years fine tuning and have a PhD behind what you're trying to do in order to be successful, but instead to just start to have a clear system and go for things. And then you can refine over time. But adding too much and thinking that you can't get involved until this very complex system has every single box ticked will be a tricky situation for you. And it might cause more problems than you think. Miriam, after starting journaling, I dropped off a couple strategies: direct impact on win rate and performance, no fear, no anxiety, see the trade, execute, book profit on predefined entry and exit levels. I love that you use your personal data to give you information on what is helpful and what is not, and what slows you down. Like last week we talked about journaling and backtesting in the Trader Psychology Lab, and that is like the key to journaling is make it worth your time. Like suss out when you're thinking about your day, what was helpful, what was not helpful, what was noise, and what was really valuable, and how you best did it or what you learned. And that is absolutely a key to trimming this down. So well said there. In trading, an unexecuted edge is worth nothing. Simplicity is what allows you to act with conviction when the setup appears. And so, yes, good. I think backtesting and journaling are powerful, but you don't want to like waste your time and really get too much in the weeds, but you want to make them work for you. So I think that's really valuable. And that plays into this, right? So simplicity, when you can pare it down to what is really core to you doing your best, it's better because the less noise we have in our head, the more we can see it in our mind's eye and execute quicker on it. So the alternative, what simple actually looks like in futures. So now this is where I'm going to tell you a little bit about how I see it. And I want you guys to know that there's a lot of ways to be successful in trading. So if the things that I'm saying, maybe talk about 3 things that are my key that I want to see in my trades, and I want less noise beyond that. If your 3 are a slight variation, maybe only 2 of these matter to you and the other one you find annoying, like go with what works for you. And you do not need to do what I do. But the core of this message is think about what you do, what the core components are, and then recognize how you really want to try and prioritize those as you progress as a trader. So let's talk specifically about some ideas around this now though, because breaking down a simple strategy when you're trading futures, I think it's super valuable. You'll notice this with Mike in the morning now that he's back, because he is a killer trader. And what he does that I think is absolutely beautiful is he just identifies who is in control. And if they hold this level, then we're going up. And if this level falls and we're holding underneath of it, we're going down. And so like, I mean, I know that there's more to his system. He's been trading way longer than me, and he is really established, and he trades big size. And you don't trade big size without rationale and an understanding that led you to that place. And so this is where you want to drill into your system so that you can work up to that ability. And so a trend is key, right? Knowing the dominant direction on your primary time frame. So then you know, are buyers in control or are sellers in control? And that gives you a bias on the day. So then I think that is like the core of a lot in future trading. And of course, we'll get the rotational days where both teams get a chance, like we saw today. And of course, today was tricky too. You have to, the next one, market context, plays into trend for me, because like, what is the bigger picture of what's the market trying to achieve? Did we fall hard, but did we fall hard into an important key support area? And so then you don't want to chase the short. And so marrying, having a relationship, maybe not a marriage, between trend and market context, I think it's really helpful, because you do want to prioritize what trend we are currently experiencing, but then also recognize where you're at on the charts. But if we are breaking lows and we're not breaking highs, then the primary direction is down for that period. And so then you want to pay attention, is structure holding or is it breaking? Because if you can figure out the direction, you're going to be so much more successful in the long term, because you know which type of trade to prioritize intraday for day traders and futures markets specifically. All of this can be used, of course, in swing trading in larger time frames, but there's variations to how you would manage it. So I'm going to talk mostly to day trading today with this example about a simple trading strategy. So for me, knowing if I am long bias or short bias is incredibly powerful. And it will be affected by some market context. So for market context, what my understanding of that is, where is the price relative to important structure? Are we ranging high? Are we pushing out of value out of where previously we have traded? Or are we sinking below it to the downside, or we range bound sideways and chop? And so if it's clearly a really choppy day, then that's a situation where you want to try and fade the extremes, or at least get a good entry and recognize to manage your stop, closely, because it might come back on you in a situation where it is bouncing from the highs and the lows inside of a range. But if we're pushing the range high and we're migrating outside of where value has been, where price has been trading potentially. Like this morning, I don't know if you guys noticed, this is, if you watch this recording, you can look back if you want. But what happened is, well, we had a hard, steady fall all night long. And then before market open, we started going sideways. It was still kind of range bounding, going sideways, but the momentum to the downside has eased off significantly. So for me, coming into this morning session, if I was only a trend trader, overnight was bearish. But contextually, what I saw was that we were sliding down hard, really aggressively, and then the aggression eased up, and there was a massive amount of move overnight. So continuation would have to be a serious liquidation situation. But the way that the aggression slowed up pre-market, I'm more on edge of, can we get a counter trend play at the open today? Because contextually, we're coming down, but we're stopping, we're slow, and we're starting to level off. So if we can see some buyers down here at this key level, then I want to see if we can break higher highs and higher lows, and then I would prioritize longs. And so you have to think about your time frame. Larger time frame, of course, the 4-hour, the daily was coming in hecka bearish, massive bearish engulfing to market open. But on edge, knowing that I am a day trader and my primary execution chart is the 5-minute chart. And my main time frame for looking at larger time frames intra-trade after I do the 4-hour down to hourly is the 15. And so on that 5 and 15 this morning when I'm looking, then I want to see when I am executing, if I am in a demand zone and there is no more momentum to the downside that is obvious, then I could get along if I saw structure breaking to the upside. And so you kind of zoom into your execution chart. And so that's where all these things kind of play in together. And so, but notice when I'm talking about like price action and where it's moving, it's not necessarily at that point, I'm not looking for, any sort of an indicator yet to give me that information. I just kind of want to think about, what is the market doing? And I think you can disagree with me. Please disagree with me if you want to. But I think an issue with early traders is that we get so fixated on something crossing and this telling us that and so, but we're going down and there's just so much noise. But I think something that takes time to learn is, what is the market trying to achieve? Are we selling or are we buying? And what could it do for the time frame that I want to trade? Because where are we at on the landscape of the market? Are we in support or are we in resistance? Because if we're in resistance, I want to be really careful in holding along, even if we've been pushing up. I want to think about those bigger time frames, and I want to recognize what is the trend and where are we at on the chart. And I think those two things are like 80% of my strategy. And that took a long time to sort out. That just, for breaking highs, you hold along, which is what Mike is beautiful example of that this morning. Like in the morning, he was like, it's holding up here. If this level holds, we're long. He got in that long and he just held that sucker the whole time. He's like, it's still long because if this level breaks and we're above that, then it's still long. Like he didn't talk about a single darn thing beyond that. He was like, if this level holds, we're still long. We're going for this level higher. We're still long. We're going this level higher. We're still long. Now this area, we'll see what happens. I will maybe trim here. And so that's him thinking about, are we really extended? Are we coming up into resistances? And so it buoys me to see him trade that way, because I think that is kind of the core of what you kind of want to trim it down to. And so within that idea, it's really good to figure out behind that what your confluences can be. And so the third part of this like holistic view of your trading plan is the key levels. So 2 or 3 price levels that matter most from your larger time frames, and the reactions there at those levels are the priority, not necessarily all of the little moves in between. And so today, as an example, if you look where the market fell into, I'm not going to pull up the chart because I'll be slow and annoying with it, but where it fell into, that was really a big fall into a daily support area that caused a gap and a push from last week. And so that for me was a larger time frame area that I needed to have marked on my chart. And then if you're looking at it, you're looking at the hard fall into demand that was previously marked from a larger time frame, from the daily, and then the bears lost their energy, then I think that is that level in confluence with that read that already had the momentum eased, and then we're starting to see some bounces and some bullish presence. So having, I think, some way that you can look at the chart and have a sense of the bias of the direction, I think then you sort of suss out with a couple extra things what it looks like in order to engage in a trade. And I think that's how you come up with the strategy. And then you can drill into exactly what your entry criteria looks like. Do you get in on the pullback? Do you get in on the breakout? If you get in on the breakout or the pullback, either way, how do you manage your risk? And so that is something you want to back test your specific instrument, how it moves, what the ATR is, how much risk you'd have to take, what account size you like to trade. Can you do minis, or really should you stay in micros until you drill it in a little bit more, especially based on the risk that you have to take per size? And volatility is heavy right now, so it's hard to trade minis with these prop accounts, especially because you take on a lot of risk sometimes. Now, to Mary's point in the comment, I really like RSI divergence at the levels, and I completely agree. So this is where I like the RSI divergence, when it's leveling off and you're starting to see a potential shift, like we did this morning from the pre-market bears to the New York session open bulls. In that situation, that's when you're like, if you think there's a pivot and the momentum has shifted, that's where indicators such as RSI can be super powerful, because then you can get a bullish divergence on an equal low, or potentially a lower low, but with bullish divergence in a setting of being in demand zone with the bearish momentum drying up. That is how you can add in one or two specific indicators that you have watched and studied and back tested, and you have found that their confluence is really helpful. That is where you want to put in a couple of things in there. So RSI stochastic divergence, I love at this. I think MACD can show you something similar with a cross at these levels when you're seeing that turn up, or divergence even too. And then volume is another thing that I like to add to this picture of a simple approach, because at New York Open, you always get high volume because there's just volume floods into the market when it opens. And so I think that if you're an opening bell trader, volume is less helpful for the first 2 5-minute candles, because it's just flooded no matter what. Every single New York Open has high volume. Like, fight me if you think I'm wrong, because I'm not. But it gets more information, especially towards after that initial volatility volume pump. Then you can start to see at pivots, you can get a high volume area. And so that can help give confluence. At breakouts, you can get a high volume, which will give you confluence. And so, those are 2 indicators that I would recommend people do study with their system, because that can be a really nice added confluence to your strategy. And of course, depending on time, like if you say you're having volume divergence at opening bell, that's just the opening bell rush. But throughout the day, and especially at power hour, I love the volume at key levels as well. So that was a lot of talking about my strategy and how I see the market. But for me, I think a lot of traders, such as Mike, like he's been a part of my inspiration when I was thinking about this weekend too. So I love that he's back. But I think having this core, like a core understanding of the market movement and what you want to prioritize, can help you frame up and drill into how you can get more specific from that. But having a clean, repeatable framework for what you trade makes it more simple, because you're not trying to add a ton of stuff or make it really complicated. Instead, you're trying to just keep it clean and then add 1 or 2 confluences that make you feel even more confident, so you can put leverage on. Now, when you see something and this is how you get to an A+ setup, is having a core foundation that is like 75% of your understanding of what trade you want to engage in. And then the confluences come in and really are just perfect. That's when you can like go full size, or you feel higher confidence in the trade opportunity and you can hold a little bit longer. So that is how you can go from 75% sure to, really feeling like this is your A+ setup, which is a very high confidence situation. When all this lines up contextually, you have a good understanding of what you think the market is doing, and then you get your other confluences in, such as a divergence on the RSI. So when you strip your chart down to what you truly understand, I think the setups become more obvious. And I love this because there's less confusion to slow you down. So if you are like, but it could be this, but it could be this, but more so if you're like, these 3 core things are here. And so I don't know that I need to even think about these other things, because I just want to focus on this main idea and look for a couple little extra things. The trader who executes one high conviction setup really well will outperform a trader who hesitates through 5 conflicting ones. And I think that this is what's up, Steve? A really good it's a really good reminder, because the Bruce Lee quote, master I fear the man who masters one kick versus someone who, I'm butchering this quote, but someone who is like sucks at a lot of kicks. You know what I mean? Like one guy who can take you out with one really good kick, like that guy's deadly. And the other people who just like dance around and like don't land them are not it. So if you can really say, I've got 2 or 3 high conviction setups, and when I see them, I'm in. And those can be the trades that make your day. And if New York session is 7 hours, you don't need to take 7 hours worth of trades. If you could just have patience and watch your levels, be really dialed in, and then like swing hard at your best pitches, those traders have the profitability that earlier traders dream of, because they know when to swing hard and they don't get chopped up in a lot of malarkey. And so that is the whole point of this, is like fewer decisions, faster, cleaner executions. You're really putting your leverage on when you mean it. And that's because you have a more clear understanding. And when anyone say if you don't get it, but like when you get that trade and you're like, this trade is gorgeous. It's like all the setups that I love. This is coming from area that I want to be in. It's going in the direction that I want to be in. I'm starting to see the momentum push. Like, you don't have to worry about that trade. Those are the super fun ones where you're just like, you're in, and then you get to add a little bit more because it's adding confluence, and then you get to ride it and your scales are farther because it's such a great setup. That feeling of like really anticipating, understanding the trade. It's not like the early rush of like, oh, I just won. Like, you don't even understand why you took a signal from somebody. You're really excited because you got the profits. But it's different when you really understand and you are becoming that professional trader who saw the setup, waited for it, got your entry criteria, and felt confident about it and felt confident holding it because there's so much data and experience behind it. That's a very different experience as a trader, having that behind you. And so I really think that mastering one setup or a couple beats mediocrity in 5 and the shooting with whatever momentum you see. I think that it makes a difference in the way that you're able to build your accounts and start pushing to higher levels, because consistent results require consistent inputs. And so trying to focus on cutting out the extra crap and the trades that were like maybe trades, like trying to do less of those and more of the like really good setups and like going for them. And that does create a different kind of trader. And I think it's in here. Wait, then. The mental cost of complexity. If you have too much noise, the counter to that simplicity, right, is that it can damage your confidence. And so when every trade requires that you have like 7 ducks in a row before you get in there, you're training your brain that you don't have really good judgment. Now, judgment is something you have to learn and you have to gain with experience. But if you are telling yourself that you can't trust your judgment and that you need to have 7 or 8 people and you need the streamer and so to already be in the trade to know that you can take it, that actually kind of slows down building your own confidence. But more so, confidence, I think, builds faster and a little bit stronger if you can practice trying to be repetitive and simple, clean patterns that you understand, and like putting some leverage on when you see those setups. And then that creates a little bit of trust in yourself of like, I've studied this, I've seen this, I want to be in this trade too, I see XYZ. I don't fully see everything yet, but I need to start taking these trades to start building my data, start having these trades to journal about that I felt because I lived through them with leverage on the table. You feel a trade setup way more powerfully when you are trading some money. It doesn't have to be a personal account. Prop accounts are incredibly wonderful because they hold the risk, right? You just have a reset fee if, heaven forbid, it's an awful day. Thank goodness, right? That's kind of a beautiful opportunity that we are in this day and age, that we don't have to hold the whole risk of our accounts in this situation. And so by putting a trade on, you will feel it and you will learn way faster by having some leverage on because you understand what works and what doesn't work. And so by having it a cleaner, a little bit less that you need to see before you get in a trade, but then trying to start to trust yourself and put some trades on, then you'll start to build this faster and you'll need less extra, which will make it cleaner moving forward. I also think that you get a little less emotional strain and highs and lows because conflicting signals can create internal conflict. And so you can get that almost tension, like you're uncomfortable, you're nervous, like, I don't know, I shouldn't have done it because this is over here and I think this guy is short and I don't like it. What if this is not that? It can cause some hesitation, some revenge. So you can squeeze your trade and then you're out, but you were right. And so then you're really frustrated because you got kicked out of the trade that you wanted and then it went without you. That can be really a hard pill to swallow versus trying to back it off and like breathe and tune out some of the noise and be like, I saw this trade. I believed in it. I need to just give it a little bit of time. You can kind of trust yourself a little bit more and pull back the emotional volatility if you're not trying to still seek the confirmations all the time. Because once you start getting into the trade, your leverage is on. So then you have, some choices. It's where you put your risk and how you manage your exits. And so if you really start to get stuck in your head, the risk there is that you get all this mental confusion and chatter and you mismanage a trade. And so Justin and I have talked about this when we've been streaming about sometimes you just it's ideal to put your trade on and then look away. Like give it a little bit of space. Maybe go for a quick walk out of your office so that it can play out so that you monkey with it, because sometimes it will bounce and it will kind of mess with your brain because trades don't happen instantaneously. You have to have a little bit of stamina sometimes to let them play out. And so by, in that situation, you walk away from trade, you're not hunting more confluences. You have put your risk on, you have accepted the risk of that trade, you have put your targets where you want them, where you think it might go to, and then you give it that space. And I love that whole approach because you saw what you needed to see to put your trade on, whether you did or you didn't, you put your trade on. And so then when you're in it, you can't take it back. Like there's no takesies backsies once you hit buy or sell. And so then sometimes that's where you just have to take in a little less data, like back up a little bit. You still want to manage your trade. If it's starting to give you tons of red flags, you can cut your trade. But in general, if it's your setup and you got into it, then that's where you kind of want to back up a little bit from constantly hunting more validation and just give it some room. And then also, I think you run the risk of resetting your learning curve. Every time you add more complication in the middle of the way that you're growing your strategy, it will kind of back you up because you have to take some time to learn it, to ask questions, to fine tune it, to journal on it. And so if you're focused on this new indicator or whatever, sometimes it slows you down from where you're at. Now, it's not always a bad thing, but it will add some more time to your learning game because it backs you down when you're learning a new thing. That could be a new indicator, a new instrument, such as going from like NQ and ES to gold. That will slow you down. It could be the right move. Maybe it's time for you to expand and learn this other thing that could be a great thing. But recognizing that it will kind of back you off from the trajectory you're on because there's a learning curve where you just don't know what you don't know with the new thing. Tina, walking away definitely helps me to not micromanage my trade. Exactly. That mental capital preservation of like, well, I'm in. I can't unbe in. So I might as well trust my setup in that situation. If you have a setup that you saw, then is that a 2-to-1? Is it a back to view up trade? Is it from the area low to the area high? What have you? Like if you have a setup and an understanding of how to manage it, then you that's the thing with trading, right? We put our stops on the chart. We put our targets on the chart. If you don't trade with targets because you think it's running, then you can put alerts on your phone. And as it tags its new level, that might trigger you to come back in and maybe snug up your stop. Because if I'm trying to catch a trending day, I don't do this enough. But what I am trying to push myself to, at least for the runners, is just set alerts. And as it progresses up in my trade and I'm still in with leverage in, then I do want to come back and manage it because I will never let a trending day come back to my entry. I will, like as Mike says, I will have a stop gain in place. And so I will move my stop loss up as the trade progresses if I'm continuing with a runner. But in that case, you don't have to stay in your office to do that. You can easily, or at your computer, your desktop, whatever, you can easily set alert on any kind of, trading view, TOS, like a lot of platforms have alerts, right? Set an alert and walk away, or just walk away and come back every 15 minutes as the 15-minute candles close. And you can choose if you need to adjust your risk, or you decide you're starting to see warning signs and you want to lock in your profits a little bit more, right? Benjamin Graham, the investor's chief problem and even his worst enemy is likely to be himself. So this is thank you, Audie, for that quote. She saved me there. I butchered the heck out of that Bruce Lee quote. Thank you, girl. So this one, Benjamin Graham, see, I need to just put them in my presentation, then I won't butcher them. Is that our worst enemy is usually ourselves. And that is exponentially true in trading. This goes off just exactly what Tina echoed me with. We don't lose trades because we had too few tools. We usually lose them because we couldn't execute clearly with the tools that we had. And I think that simplicity and self-discipline are really powerful because if we can, trim it back and be like, if we're still pushing highs, then I hold my long and I move my stop up and I exit if I choose to, or I scale if I choose to at levels that I think that there could be a resistance point at. And so that is, I don't want to monkey with it, like I don't want um, to take myself out of the game. Like this morning, actually, there was so much volatility that I squeezed my stop on one of my trades because I got one scale out and then it was kind of monkeying around, and I moved my stop up and it just took me out on the pullback, and I was like, so then it was still progressing and I was like, I snugged it up too close. Like I still do stuff like that. And part of it was the risk management choice, right? Like the candles were really large. And so I wanted to protect myself. But then I just ended up getting back in because the trade was still in play. And so in that situation, had I just set it where my risk was to start and given it just a little bit more wiggle room, then I wouldn't have had to cut my runners there at a break even and then get back in at a higher price. And so I would have ended up with a little bit more profits if I didn't have to get out and get back in. And so this is exactly this whole point of sometimes sitting and staring at your charts can make you monkey with it. And then that is where you can complicate your situation versus having a clear setup and then respecting your risk in that situation. Oftentimes will create cleaner taste and you will have less mental capital loss. You'll have less like, oh, you're micromanaging every single candle. It can make you kind of mess with things. So what about you guys? This I just admitted it literally today. Have you ever taken yourself out of good trade because of a conflicting signal? Anybody? Because that's a yes for me. That's where I'm like, okay, well, they were so bearish overnight. It could reject here and go a little bit lower before it wants to push up. Like I was bullish bias this morning and my trades were all long. But then when it was hesitating and it started to pull back, I snugged up my stop because I didn't want to take back that whole range. But the longs were correct. And so then I just had to get back in. Market totally plays with our emotions. It really does. So this is my Bruce Lee image that is not copyrighted, so it's not actually Bruce Lee, but this is what Waji's quote. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Like that. So this is why the simple is a strategy for success in a lot of things, but it's in trading as well. Ooh, Miriam had a killer morning. I love that. So this is the principle of keep it simple. Some people say keep it simple, stupid. I do not prefer that. I don't think it's necessary to say stupid to anyone. There's just maybe opportunities for growth. So keeping it simple is possibly an area that a trader could pare it down at. It's not just a trading rule, it's a life and a business strategy. And so a lot of successful entrepreneurs, athletes, and creatives will operate with ruthless clarity about their core focus. So the primary objectives and how they go about it is like so important to really like nailing it. So like Steve Jobs, right? He pared Apple's product line down to their primary items so that they could become industry leaders and become exceptional in that world. That was a choice of like, let's be the absolute freaking best in, electronics, the cell phones, tablets, and computers, and that they became significant bosses right in that world. Elite athletes drill the same fundamental moves 1,000 times. Think about an elite athlete such as like a runner. Well, that person probably is also a pretty good basketball player and hockey or whatever the heck, maybe he's a killer badminton player. But what he's exceptional at is running. And so that person then will drill into that exceptionality and lean into that if you want to be in the Olympics, what have you. You find what you are the absolute best at, and then you lock into becoming exceptional at that. And this is what you can do with trading, is recognizing that I like 7 different setups because I have heard about them from other traders and I think that makes a lot of sense and it's pretty cool. But I know when I see XYZ, this is my golden setup that I understand inside and out and I want to like really go for when I see it. And so to have that in our minds and have that data that we have studied and we have traded, creating our strategy, and then we know when we see it, we just go. That is such a beautiful place to be as a trader because then the opportunity is like, it's really quite impressive. So I do think, and from what I have read, I do actually consume a lot of content because I am in that world about what elite traders do, what historical figure traders have done. And a lot of them will have 1 or 2 setups that they really believe in. Oftentimes it's a trending setup and then something else. But then when they see that, they go and they hold and they have confidence and they'll talk about it and they'll leverage in and it will be these massive trades. And it's usually, if you ask those traders what they did, it's not a long, complicated story about all this crossing and bouncing and divergence and stuff. It's like this was moving. It had momentum. This is my A+ setup. I went for it. And I just held on for the ride. And that is like the goal, right? Of to have 1 or 2 killer setups that you just take. And those are who you are as a trader. And I think those traders make a lot more money in the long game. And those are traders that we know of because of this work that they do. And so I think that if we view simplicity not as a limitation, but as a competitive advantage to try to see less, but when you see your setups, you go for them. I think it's really powerful. So intentional growth is the last part here of when you're ready to add, do it right. So adding to your system is not a reward for boredom or because you just want to, but it's more of a deliberate choice. It's an additional opportunity for a confluence that, but you test it, you understand it. If you were learning it from a mentor or someone, ask them questions, like ask for examples, find examples of your own, back test, and take screenshots of the charts where it worked and what it looked like and what level it was at. If it's a divergent situation for a pivot, you're going to want to see, which days, what was the setup for those, how many opportunities, at what point did it give that pivot? And then if the pivot happened with that divergence, what did the entry look like once you saw that on your charts? When you got your divergence at the pivot level, was it a break of a 5-minute candle that got you in? And so when you can start to really, if you see something that feels like it could be a really good addition to your strategy, then do it. But do it in a way that you are getting data and you are trying to really understand it. And it's a deliberate choice to add it in there, because if you're just haphazardly putting it on your chart because someone told you to, and then you're looking at it sideways while you're trying to get in a trade, but you don't really understand what it's at, that's where it can mess you up. That's like the core of this whole thing, is like, that's the situation that's dangerous, is by having a clean system and then adding something that so-and-so said was great. And then you get so fixated on this thing that you don't even understand that you're missing your core system. So that's what I want us to try and not do as we add and grow and evolve as traders, of like, develop a strong core system that you understand. And if you want to expand, by all means, because the market is abundant. There's a lot of different instruments we can trade. They move slightly differently. Certain things will work really well on this instrument and not on this one. But if you choose to expand upon a system that works for you, be really intentional and deliberate with it. Because if you, and this quote down here, if you can't clearly explain why you're adding something and what problem it solves, then why? Then what are you adding it for? Like, what's the point of your plan here? Because I think that if you don't fully understand why you need it and how it augments your system, then I would encourage you to not. But if you think it adds true value and it's from a trusted source and you really have seen evidence of it working, then by all means, right? So this is some suggestions for an action item if you find that this resonates with you and you could potentially pare your system down or adjust it or make it more effective for you. And now I know in our live stream, we have some really good traders in here, but if you're watching this as a recording and you're an earlier trader, like, really drill into this here, because this could be how you could progress your trading strategy. But I do think you want to audit your chart. So that's the place to start with this whole conversation. And maybe you have nothing you want to trim, but maybe you have like half that you can just get off of there, because like, it's always was confusing to you. It was annoying. Someone told you to do it, but you never really spoke to it and you don't want to deal with it right now. Maybe that's a conversation for down the line. So cut that. Any indicator that you cannot fully explain in one sentence why it works and why you love it, then you don't really understand it very deeply. And it could be extra noise, because if it's a whole convoluted situation that you're trying to explain to another trader, why it makes sense and what you think it's supposed to do, then in the moment that will slow you down. That could be something that you put on a list somewhere that is something you want to back test on a Saturday, go for it. But if it's on your day-to-day execution chart, it should be a one sentence, clean, clear execution of, when I see this, it helps me understand this. And then define your key pillars. And so I showed you some of mine with the context of the trend and my key larger time frame levels. That can be slightly different, like I said, for you. But I think I think a lot of people here do have a written playbook, but having a written playbook and an understanding of what your setups look like is super powerful, because when you know what you're looking for, then you should be able to write it down and be able to reference it and remind yourself exactly what you want to see and plan ahead for. My setup is XYZ. This is what I see. This is what I go for. And then you can have that written down in a document, in a journal. You can post it in your office. You can review it once a week to keep your mind focused on exactly what you need to see until it's like a part of your blood. Like Matt, I'm sure his setups are literally in his blood. And so he probably hasn't reviewed notes on his key setups for a very long time. I still like to look at my playbook. I should do it more, because when I do, I'm like, oh, I love that setup. Like, I love when I see these things line up. Like, I know exactly what it says when I read my trading setup. And then I trade better the next session after I review my trade setup every single time, because it reminds me of what I am looking for and how I can feel confident in my trading. So define it and review it regularly. And then trade one setup. So pick your highest conviction setup and then only try to trade that setup. Try and hunt for it. Try to say, I want this like break and retest out of a key level. Like that is the trade that gives me the highest success rate. That's what we've been seeing in this market that we've been going on lately. That gives me a risk that I tend to be able to tolerate. And then just try to lock into finding examples of that and then putting side like putting your leverage on, taking those trades. And then that will make you stronger. It will make your trade setup stronger because you are specifically deliberately practicing them, and then you get better and better and better. Miriam, yeah, I traded one setup last week in one account and got 100% win rate on it. That's what I'm saying, girl. Okay, so if you have your highest conviction setup, like hunt them. And when you see them, take them, and then it will make you stronger. You will gain that confidence that I was talking about a few minutes ago about knowing what your best setups are, understanding them as deeply as you can. And then every single time you trade them, either you will get more conviction and confidence, or you will find ways to fine tune them. Like that's the two outcomes. When they don't hit, you could figure out what was different about that day and how maybe you can refine your system. But by refining like a core system, you can really get even better. And 100% win rate for a week is boss. Like we don't say to seek 100% win rate, but if you really have a good system and you're very intentional with it, it can happen. So I mean, protect that. But like like this is a really there's a reason why I'm kind of nerding out on a simple idea. I'm spending a whole hour talking about keeping it simple because I actually believe that it like will help stabilize a lot of traders that might have a little bit of extra noise in their system. So, and then also if you have noise that turns out to just be noise to be distracting, unfollow it, unmute it, mute the channel. Don't click on the links when it pops up for you. Maybe it was something that a streamer that you found really valuable at some point or some feed of content, and you hit the notifications and it pops you up all the time. But then the last couple have just been being noisy or unhelpful. Like you can unfollow. Don't unfollow BluSky because we're amazing. But if there is noise out there, cut that. Curate your inputs ruthlessly. Okay, that's a 4-word sentence. Curate your inputs ruthlessly. If it's good for you, keep it. If it's noisy and not helpful, cut it. That's what I'm saying. This is an author, Antoinette, I think it's French, Antoinette de Saint-Exupéry. I don't know, it's French and I don't speak French, but this author, this quote, perfection is achieved not when there's nothing more to add, but when there's nothing left to take away. And I was like, even though I can't pronounce your name, I love your quote endlessly. Because when you strip it down to like clean, clear, obvious, really good opportunity, then that is perfection, right? Not having extra noise. So to close this down today, I would say try it. Try to keep it simple and trade really well on your best opportunities because it's not the daily increase, but the daily decrease. Hack away at the unessential. So a second Bruce Lee quote today, because he was kind of really a master being exceptional at what he was exceptional at, and then not trying to do every single thing. No one needs to be exceptional at everything because then you'll just be stretched so thin that everything can suffer. But knowing how you really see your market and your trading strategy and locking into doing the best with that is super powerful. And I just love that energy behind trading because it's calmer, it's more steady. You can build more, you can trade a little bit bigger size when you get your really good setups. You can start to get bigger P&Ls with less commissions, less fees, less stress, less carryover. You by locking a really good trade, in my opinion, it's so much easier to walk away for the rest of the day and like have that life balance as well because you swung at your great pitch, you got an outcome, and then you get to have this full robust life. And a lot of us, we seek trading for financial freedom, but being glued to the charts for 7 hours, taking a bunch of B and C setups is not it. But taking 1 or 2 A plus setups and then actually having freedom is it. So that's where I'm going. That's what I want for all of us. So let's try and master our things that are worth it. So that's what I got for this week, you guys. Thank you so much for hanging with me at Psychology Hour. Ooh, Mary. Next week's topic, understand your style and adapt and navigate. Okay, I'm gonna screenshot that and I will put that in the running. I have another one lined up, so I'm gonna think about it. We'll do it in the next week or two. Um, yes. Okay, so Tina Marie and Miriam are both really good traders in our trading community, and I love that it's still was helpful today. So I appreciate you guys being here with me for Psychology Lab and then all of our content here at BluSky. We're about getting ready to switch gears back to the charts and talk about price action and what we're seeing for power hour, see if we can see any excellent trades at the end of the day here. But for all the reasons, I appreciate you guys being here with us at BluSky. We really try to deliver the best content that can make us all the best traders we can be. So I'm going to pop off for a second and You guys are very, very welcome. I'll see you guys in Power Hour in just a couple quick minutes. Coach Matt and I will be here for you to close down the market today on this wonderful Tuesday afternoon. Take care, you guys. Bye.